Hey, are the high mortgage rates that we're seeing right now, are they the reason for the housing slowdown here in the Jacksonville metro area? Or are they, okay? Or are they really that high? I'm gonna dive into that tonight on really what's going on this market up here. Hey, I'm Tom Kerr, and this show is Bubble Watch, and every week I come to you and bring you the housing market data up here in Northeast Florida's Jacksonville metro area. That's right, I'm just a regular guy who happens to be a real estate agent up here, so I have access to an MLS account, and I share that with you every week. In fact, this is what I'm gonna go over tonight. When we go into the back end of my MLS account here, we see I'm going to look at the actives, and those are the active listings, and that is your inventory, okay? That is your current inventory. Next, I'm going to look at active under contract. Those are the ones that went under contract. Since this is a weekly show, we're going to see how many went pending in the last 7 days. Look at what was sold in the last 7 days. Look at new home data for sales and their inventory, and much, much more. When I get all that data and out of that MLS, I put it into an Excel spreadsheet. Well, it exports into an Excel spreadsheet that looks like this, which is a little bit harder to understand. I condense it into one of my own that I created like this that makes it easy to follow week by week, where we're going to take a look at these trends and see what's going, because we're trying to catch when that market is going to slip. Right now I'm filming out on location, and I swear every time I film, I don't know where, no matter where it is, somebody's got a leaf blower or weed whacker stuff in the background, so you're going to hear that also. I hear them firing it up right now, okay? So those Excel spreadsheets, like I says, we're going to get to those, but before I get to those spreadsheets, let's see what those interest rates did in this last 7 days. Okay, here as we look at the rates, where we leave off at the previous week on all these charts is going to be down here at the bottom right here. So as you can see, this is the 30-year fixed, and this was 7.07 last week. We see we got a bunch of red arrows up and one down, very small, where we ended up at 7.15. So we did have an increase, and it's a pretty good increase. So it's definitely stuck in the sevens. Okay, we look at those FHA rates, and they're generally a little bit less. And we see here we started off at 6.39, had a couple green arrows and rest reds, and one just stayed consistent. So we were at 6.39 and we ended up at 6.48, so an increase also in FHA. And we take a look at those VA rates, which follow pretty close to the FHA rates. They were at 6.41 last week, ended up at 6.5, so definitely an increase for them also. Well, those rates have definitely, it looks like 7% is the norm again this week, okay? And I know they're just stuck there. It doesn't seem to be budging, even though we were told all this about how everything's coming down. Well, hold your horses, we'll see. All right, now let's get to those Excel sheets. Now, these Excel sheets you're gonna see is gonna have a lot of data. It's taken from the Northeast Florida MLS. I'm gonna have all that in there, and something I do that I don't see anyone else do, I show you the median price, the sale price, and the median price per square foot on a weekly basis, and that's from this MLS data for all these solds. So some people say, well, that's not true, you need a monthly. Well, you know what, I'm going to show you all the past ones too, so you can make your own monthly if you want to, but I show it every week, so we kind of see, and all this is going to tie into what I'm going to get at here later on in this show. We're going to be talking about those interest. Whoa. It's part about being out and outside doing this is you got a lot of noise. And I'm going to be getting into about those interest rates. Are they really the problem? We're going to see how this all plays out. All right, let's get to those Excel sheets right now. Okay, here we look at my Excel spreadsheets, and of course, for those of you that are new, let me go through a quick explanation, and the others already know, you can just move along. As you can see here in this column here, this is our current week in yellow right here, and this is week 35, and these are going to be all the numbers. Now these other yellow columns are the previous weeks, okay? Now this column right here describes what is in those rows, where we can see active listings, sold, active under contract, and so forth as we go through this list. The white column to the side is last year at this time. So these were the exact numbers I pulled, just as I'm pulling these numbers tonight that I pulled back then a year ago. So that's what's so great about my charts, is you can visually see exactly what the comparison was last year at this time. And it's amazing sometimes how some of these are pretty close. Why, oh why? That is the percentage of change in the 2 years, in between last year at this time and this year. The blue column here, SFH, that is single family homes. Since that is the largest selling part, I break them apart just to show what the single family home market is doing, and those numbers are off to the side there. So let's start off with this week, and we start off with the first one, active listings, and it was 9,147. And you can see that that is a jump from last week. Okay, now, last week we had everything tank because you had all those expireds, okay? These contracts, a lot of them expire at the end of the year, 12/20/12/31, and that's what does that. Let's take a better look and look back at the previous week where we were 92.96, and we're not even back up to that. We're still below that. So that's what we have to watch, and we'll have to see how well this inventory goes back up. Sold 247. Now, that is horrible, but remember too, these sold numbers are when they close within this last week, but they've been under contract from anywhere from 2 weeks to 2 months prior. Active under contract, these are the numbers we want to see. This is rolling, that rolls week by week. 818, that is up from last week. Pending, now these are ones that went pending in the last week. Now those that are active under contract are ones they're under contract, but they have contingencies. They're still waiting for the inspection, appraisal, financing, things like that. Once those pass, those contingencies pass, now we go into pending status, okay? So a big indicator here is how many of those went into pending status in the last 7 days. Here we see 294. Now, that is one that really you can track week by week, okay, seeing what happens, okay? Now, total under contract is when you add those both together. We see those. Withdraws are people who the listing is an active listing, but it cannot be shown. A lot of times people could be sick, they don't want others to get sick. They could be they're doing repairs to the house, anything, but it can't be shown. Okay, expired, those are the ones that went off the market. They did not sell, and we had 147 this week. So even first week, I mean, that number, I thought the number would be lower, but that's still high. New homes sold, I mean, literally fell off the cliff, I mean, from last week's, okay? Only 41. New homes active, 2,200, so that number we expected to go up. Now here in the orange, this here is the percentage of homes sold that are new homes. That dropped to a low 16.6%. Look at the previous 2 weeks, 39.7, 39.65. This was dramatic, okay? And then of course you see all the other columns, and then of course, you know, the single family homes, which you can see for yourself there. All right, so how do people pay for these homes? And what I do is I break it down by the percentage. So you see how much percent paid cash, conventional, FHA, VA, and other. And I would expect other to be going up. When the rates have stayed in the 7s, people look for alternative financing. Now, these numbers right below show you the units sold. So we had 247 units sold total, and it will see there 76 for cash, 87 conventional, 49 FHA, 25 VA, and 10 were other. Okay, the foreclosure numbers here. Now these are foreclosures that are active listings, okay? Not the total foreclosures for Northeast Florida, just that are in the active listings that are status as foreclosures, pre-foreclosures, and short sales. And you can see we did go up a little bit from last week, but still down from the last couple of weeks. Next, I take a look and see the percentage of homes sold under list, how many percentage sold at list and above list. This is of all of them total. You can see there that over 82% sold under list price, okay? Homes that sold at list stay in there at, you know, almost 12, and homes that sold above list has dropped. And again, those numbers that correspond with the units, you'll see below. All right, next I break it down by price categories. 500,000 and above, you see over 1/4 of all homes sold for $500,000 or above. Homes in the 400s was almost 11. Homes in the 300s, just over 23%. Homes in the 200s, okay, over 24%, and the homes that sold below 200, 16.19, and that has gone up. And what you're going to see now, this, remember, includes manufactured homes and, you know, any older single-family home that's a smaller unit. The numbers below again correspond to the actual units sold. When we look at the new homes, we see that over 3/4 of the homes sold for under list price. Homes that sold at list price, almost 22%. So that was a big jump. What really dropped, this is something, homes that sold above list, okay? And when you look here, because there was only 41 units, only one home sold at that. All right, here now I take you into a chart here that this was data that was just brought in from the original Excel export. And here what I do is I'll show you, as you can see, the type of home it is, single family, etc. The original list price, okay, the list price. Now the list price, what that is what they reduced it to before it ended up selling, and then the closed price, which is the sold price. Now, as we can see here, that one at the top, and then also the difference I've got right there off to the side, and now I got days on the market. So this is going to go all the way down through all of them. It's going to show also the ones that sold at list price and the ones that sold above list price. So this gives you more data from just those charts when I was giving you the percentage and the numbers. Now you can see the data, and then it's just curious to see how many days on the market before they ended up dropping these prices, okay? Some people drop them sooner than later. So I'm just going to scroll this all the way down, and you can pause it as you'd like. And then as you see, we start getting, you know, less and less, but still, that's still quite a bit, okay? Look at those, I mean, in the 30s, you know, below list price, okay? And then look at, isn't it funny, like, look at this one right here. 2 days on the market, and they still dropped at $25,000 and took it, you know, and then others will be on the market for like 100 days or more. All right, we're getting a little bit smaller numbers. Now we're at the zero, so when we see zero, that's sold for the list price. And you can see, you know, the days on the market with that too. And the next one is the ones that sold above list price. That's our final ones. Some of these numbers aren't very big, $100 to just a couple of thousand. And that could be for concessions. They went above list price to get concessions for closing cost or actually, you know, real estate fees. Okay, here we look at the median prices, okay? Like I said, you know, I'm the only one I know of doing it like weekly at these median prices. Now these are the median prices for sold units, okay? That first number, okay, now here in the yellow, this is our current week 35. Single family homes, the median selling price was $375,000. Now see, you can compare it between the other weeks. Just see there. That's what's so nice about my charts. Now the median square footage sold is right below it, so it was 202.91. All right, townhomes, $275,000 for their median sales price, $204 for their square footage. Condos, pretty high, $319,500 for the median sales price, and their price per square foot, $264. Okay, the next thing I do here is I take a zip code, okay? And generally it's a zip code that somebody has given to me. If you want to see a certain zip code, just put it in the comments. I only do one a week though. So like if there's several in there, then you know yours may not show up until the following week or so. But and if no one has them in the comments, usually people will text me or something like that. So I pick a zip code. This zip code for this week here is 32246, and on this map you see where it is in relationship to Jacksonville. Okay, as far as right there, the dots are the ones that are actually active inventory for sale. And then we flip it over, you see these are the sold units in this last 7 days. Now I bring it over into the charts, okay? Here's the sold in that. Now, as you can see at the top here, it tells what they are, whether they were single family, townhomes, whatever. The original list price, the sold price, then the difference. Okay, so whether it was below list, at list, or above, it'll show up right there. Days on the market, what type of financing for that. Of course, they're all in the city of Jacksonville, Duval County, and there's our zip code. This here is your living area, that's your square footage. Next you've got your year built. Bedrooms total, okay, that's your total bedrooms. Bathrooms total, but then we break down the bathrooms by full and half baths. Then we look at what was the sold price per square foot, the lot size in acres, if the agent put it into the MLS, then I'll show it here, and whether it was new construction or not, why for yes it's new, and for no. All right, now what if you want to buy in this area? Okay, that was the ones that just sold in the last 7 days, take it. These are the ones that are actually for sale right now. And pretty much kind of the same type of data across the top. So I'm just going to scroll this one down, and then you can pause it as you need to if you want to study it. And look at it. And you can then flip back and compare it with the one where I just showed you, which was the sold. Almost done there. Now, in case you want this for yourself, my Excel spreadsheet that I use in this show is downloadable from my weekly newsletter. And you go back and say, like this main log here where we started, I go all the way back to 2022 of May when I started this show, so that this is available for you. And then all you have to do is just go ahead and email me at this email address here. Say you want to be put on the newsletter, and I will put you on the newsletter, and the link to download it is in that newsletter. So it looks like that Jacksonville housing market right now may be as cold as I am right out here in Jacksonville. I'm telling you, it's been in the 30s in the morning all the time. I'm here in Florida. All right, now we're going to take a look at something that's called MLS Advantage, okay? Before I get to that, I just want to, if you like the way I put this show together, you like these sheets and all that, the information, then give me a thumbs up. And if you want to be part of Bubba Watch Nation, then hit that subscribe button. MLS Advantage, what is that? This is where I look at the whole 9 counties in this Jacksonville metro area. Some people say 7, this and that. I look at it as 9, and it's these counties here. And so what I'm going to do is I look at these other MLS boards. There's a lot of smaller boards around here. We look at that, take their sales data, and then give us a broader picture, okay, of what's really going on, because a lot of these agencies cross-sell. I cross-sell into others, and they cross-sell into our area here too. So we're going to put that together. When I do that, we're going to give you the total number, and then I'm going to break it down by county, okay? That's where I go to another Excel sheet that shows you how many sales were in each county on this MLS Advantage. So some people just want to know St. John's, Duval, Nassau County, whatever. I'm going to show you all those counties, those 9 counties. So let's go to MLS Advantage right now.
All right, here we are into the MLS Advantage section, and what we're going to do is look down here for these 9 counties: Baker, Union, Bradford, Clay, Nassau, Duval, St. John's, Flagler, and Putnam. Then what I do is I hit the search button here,
and that number is 348. All right, now when we put them into counties and look at them, then we break it down like this. You see Baker County had 4, Union was 0, Bradford 2, Clay 32, Nassau 30, Duval County 138, St. Johns County 69, Flagler County 54, Putnam 19, which brought us to 348. Now it was interesting as everything dropped tremendously. You see there, Putnam County actually went up, Baker went up also. It all depends, where you're at, but this breaks it down for you. Okay, now because of the condo situation in Florida, that is a disaster or a mess, whatever words you want to use for it, all depends on if you've got a condo or not. I do show the condo information in their own Excel sheets. And so that's what I'm going to do right now. Now, if you're not interested in the condo stuff, then you can just skip this and go right to where I'm going to talk about the rates, what I was going to talk about in the beginning of the show, what I mentioned, okay? So right now I'm going to look at those condos things, because the condos now do have different requirements for funding for repairs, that they've got to, build up these reserves, and it's created a jump in assessments and HOA fees, which have forced some people out. So we look at that data, but we're just going to briefly look at it real quick. So I'm going to the condo Excels right now. All right, here is the condo Excel spreadsheets, and This here is pretty much kind of similar as the others, so I don't really need to explain it all. You see on the side, it doesn't have as much data because I haven't been doing the condominiums as long. As you can see, this is week 45 of the condos first season. So as you can see there's the numbers that are with the condominiums, and of course you can pause this video to study those numbers. I'm just going to go through them, you know, rather quickly. How did people pay for those condos? As you can see right here, the percentage for cash, conventional, and so forth, and then the numbers below are the actual units that sold for that. Again, I tracked the foreclosures on those also, and there's foreclosure numbers. It looks like it's probably the same ones for the last couple weeks. Again, the same data, the percentage that's sold at list, under list, and above list, and then the units below. Again, break it down by price categories, so you can see the price categories here for those, and then also below it you see the units also that's sold. Again, nothing new in the news, so we move on. Now here, because of the new law, it requires, you know, the condos 3 stories and above to comply, you know, based on the year of the condo, what the age is. So I just tracked this to see if this showed any trend towards gravitating towards condos that are under 3 stories, and really haven't seen a lot to support that, but this is how this played out this week. And because of the years of the condos matters also, I show you what year the condo was, you know, and what story for a particular unit. This is each unit, you know, each row is one unit, okay? So that first one was built in 1985 and the complex was 1 story. The second one was built in 2016, the complex was 2 stories, and so on. This is the counties that had the condo sales. You see Duval with 5, St. John 6, and Nassau with. Also put a list here for the condominiums the same way, where I show the original list price, the list price where they reduced it before they ended up taking the offer, and then the closed price, which is your sold price, and then the difference there under list that they sold it for, and then the days on the market also. All right, now let's get to it. Is the mortgage rates the problem with the home sales, okay, up here in this Jacksonville area? And you know, speaking of home sales and all, I do work with a team of agents up here where we help people buy and sell homes. So if you're in the market to buy or sell your home, then just call us at this number right here that you see here, or send an email to this email. You can also text us also. All right, let's get to it. Mortgage rates, okay, a lot of people say, man, until these rates come down, nothing's changing, this and that. But I don't think, it's not the mortgage rates aren't the problem. Oh, I know a lot of you right now, 7%, you're freaking out. That's because a lot of you went through this nonsense where it was 3% or less, which was unheard of. You know, when you're as old as I am, you've seen a lot more, and that was a very small part of our life, was that rates were like that. Okay, let me show you some charts just to bring this up, and stay with me because I got a lot more information other than these rates. But let's look at the mortgage rate charts first. Okay, as you can look at this first chart here, all right, this here shows mortgage rates from 1971 to 2024. Now, I don't know what, you know, they go down here like where it's at. Since we're in 2025 right now, that number, that little line on that graph will be a little bit higher, but they say the average since 1971 is 7.73, but that's a little misleading, okay, because see that big jump there? Okay, that's all part of the average, okay? You know, when rates went to like, you know 16, 18% back then, okay? And I know some of you, this might be the first time you're even seeing something like that and can't even believe mortgage rates were there, but they were. Okay, so that's not really the norm. But here you see that dotted line is what they call the 7.73. What I want you to focus on is right here, the 5% line. Okay, look at that. Where did the 5% drop below 5%? Was around 2010. Okay, after the real crash in 2008. You know, we haven't had a real crash right now, even though people say that it is. Look at that. Now we've dropped a lot lower there where you saw, you know, around the COVID era, and then all of a sudden everything went up. Now focus on this. Look at right here where we're at in this area right here, the last few years, up in this area here, okay? Above 5%, in the 6-7%, I think we even touched 8% slightly. Compared to the whole thing from over 50 years, look, I mean, it's really, this is the norm, okay? This is normal for most of everything to be above that. Look at over here all the way back to 71. Even before we had that spike, okay, we were already there. above the 7.73, and then all these other years. So in 50 years, okay, this is a very small amount where it dipped, okay? So that is not the norm. What we're in now is more normal rates. Take a look at this chart. This shows the rates over time. Now they go from 1976 to 2000, from 2023, okay? Look at back there in 1976, 8.87. Look at all those rates there, 8s, 9s, 11s, 13, 16. See how everything went up? Then it went down, 12, 10. 10 for a long time. Look at that. From 1986 all the way to 1990, 10%, then 9. I mean, and then the second row here, all that through the, the 90s there. I mean, all these rates, 7, 8%, 6s, 5s came back after the Y2K. They started dropping a little bit, but still high 5s in the 6s, all that. Then, just think, now 2005 to 2008 was when people were buying like crazy, okay? It was a feeding frenzy, and look at what the rates were, and people were buying like crazy. 2008 was the real crash and everything, and for the next couple of years it was a disaster. So they ended up, to try to rebuild the industry, they started lowering these rates really low until we saw that ridiculous below 3% in 2021, and things started going back up. Okay, so we can see that the rates at this level is nothing new, okay? So what is new? All right, well, what I'm gonna do is I'm gonna take an example of a house, and this house here is in Mandarin. It's in the Jacksonville, area of Mandarin, okay? A really, sought after neighborhood, okay? And I'm going to be using Zillow, okay? A lot of realtors don't like Zillow, but I love Zillow because it really helps me work with my customers a lot better, because they can look at Zillow, easily, and I can help them understand things. So Zillow is public. Everything's out there, so I'm not sharing with you any any private information, stuff like that. I'm just pulling it from Zillow. We're going to take a look at this house, and let me show you something that's pretty astonishing. All right, first we're going to look at the data. Zillow shows you all this data, okay? Start out here, you see the house was built in 2002, okay? And sold for $216,400. That low number below, that was the price of the lot when they bought the lot to build the house. Okay, as you can see, 10 years later, okay, keep this in mind, keep these numbers in mind. 10 years later, they go to put it for sale. They list it at $295, okay, from $216 to $295 in 10 years, okay? They kept trying to sell it at that, couldn't sell it, that kept reducing the price. I mean, you see the prices go all the way like $265, $240. I mean, it just goes lower and lower. Finally, when they had it like at $225, they got a pending sale, and they ended up selling it for $217, which is pretty much a wash, okay? Now, keep this in mind, $217 back then in 2020. 2 years later, they put it up for sale. $287, okay, is what they were listing it for, okay? Now look at that. Look at the other price changes as that goes through. Now this one here, also it started lowering even more, started going down, ended up selling for $242,500, okay, in 2014. All right, so let's take a look at this then. That would be 12 years from when that house was built. It was at $216,400, and let's go out, not 10 years, but then 12 years. In 12 years time, you went from $216,400 to $242,500. Okay, now let's look ahead to today, okay? 10 years, okay, from 2014 to 2024, what do they put it up for sale for? $540,000. All right, from $242,500 to $540,000. I mean, over twice as much, okay? But then they couldn't get that, reduced, still they ended up selling it for $510,000, okay, just here last month. So this is your problem, okay? It's not the rates, because I tell you, even if the rates were 3%, a house at $500,000 now that used to be like half that price or less than half, it doesn't matter, 3%, 2%, 1%. You're not going to be able to afford those monthly mortgage payments, you know, at a price point that high. Not only that, people have gotten, there's so much, you see so many that are 500,000, lost the fact that what is 500,000? That's $500,000 for a house, okay? Now, think about this. Because of that higher price, the taxes are a lot higher. That's right, because if they assess it at that sold price, those taxes are ridiculous. The cost to rebuild and everything else on up, insurance. So it's not the mortgage rates. The mortgage rates can be 10%, and it's not going to matter because of everything else, because of the price of the house that went up so high and those taxes and those rates. That is what's killing things right now. And, you know, I mean, it's really tough. If you're able to stay put where you're at, then that's fine, but not everyone can. But there are homes out there, new homes in the 200s. A lot of them are townhomes, but at least you can get a house. And some, I've seen some of newer regular single family homes that are for sale dropping below 300 in some places. I know a lot of you want to be at 150, but that's not the case right now. But there are prices coming down in some places. Hey, this is week 35 and it's in the can, and until next week, I'm out of here.